Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, December 22nd. You know what that means. Got Christmas coming up, and hopefully you're not going to the local mall. Okay. Uh, oh man, my mall just to the east of me, brutal on Saturday. Unbelievable. I wouldn't dare go in there. They'd have to pay me. So we'd like to welcome, we got Cameron May with us also in the chat. We welcome him. We'd also like to say just Merry Christmas if you're not going to be with us the rest of the week. If you're not, okay, I want to wish you and your family a happy Merry Christmas. So just real quick, also want to give us a quick reminder that we've got a couple things I need to actually make mention of as far as what we're going to cover this week, as far as on today, Tuesday, Wednesday. Obviously, Thursday closed and Friday. So you have a little longer week, okay, ahead of us. So now just real quick, remember that you could follow Cameron or myself on X. Cameron will post his handle there in the chat. We do post educational content and also announcements, speaking of that. So one thing I want to kind of make sure is if you said, hey, I'm not subscribed to the Trader Talks channel where I can get this information, just do it, okay? It's free. That way you can find it, okay? And so one thing is if you have subscribed already, you don't need to subscribe again. And you'll see that subscribe also right in the bottom right of your screen, okay? Or you can actually go to this page. Second thing, just real quick, is we are on a schedule, okay? We did not want to start the year out in 2026 and kind of say, hey, let's kind of like rebuild things. Let's kind of take the moment now, which we've been doing, starting last Monday. So last Monday, we actually, let's show this. If you said, I don't have this either, bookmark it. And you're going to see that last Monday, we talked about day one for 2026, structure and strategy. We reset the sample portfolios. We have two of them, a margin account and an IRA. We'll get to those. And also remember that we talked about kind of the curriculum as far as what we were going to discuss. Now, today's we did on Thursday, trend trading, that trend trading sample plan. Now, if you said, well, where is that? Okay. Where is that trend plan? Okay. That we actually discussed. It's right there. So if you say, I don't have that, I just sent the link out to you. Today's date or a topic is not going to be so different. It's really going to piggyback on what we talked about with trend trading, okay? So just feel like if you kind of said, hey, trend trading, that was kind of new for me, today is going to give you more time to grasp what we actually talked about on Thursday. Now, some of the points we don't have to go over super in depth. We can actually kind of say it's a repeat of what we actually talked about with trend trading. So just know that, and that's fine, okay? But we will emphasize that. Now, I also want to give us a quick reminder. One thing is if you said, well, where can I actually go to see, as you do all these classes, where can I actually go just right on Schwab's website to see those in a calendar format? Well, if we go to, let's say, Learn just real quick, we go to where it says Schwab Coaching, okay? So Learn Schwab Coaching. We're not even logged in yet, okay? Learn Schwab Coaching. Now, one of my favorite pages, if someone said, hey, I want to go to Cameron's class or Barb's class or Connie's class, go to live webcasts and virtual workshops right there. And if we go to live webcasts and virtual workshops, you're going to see over right here the calendar, okay? And what you're now going to notice is over here to the right, you can search for any coach, okay, or any instructor. If you said, hey, where can I see on a calendar those topics that you actually taught? Well, if we actually go to Coach James Boyd, example given, you can actually see the topics that I actually discussed. So there's that one. Today's topic is going to be put in there right after this class, swing trading. Now, you will also notice another announcement, okay? Okay, tomorrow trading futures. And then tomorrow, right after that, you can almost be doing like a workshop from home. Why not? Okay, that's going to be on what? What's the topic tomorrow at 11 a.m. Eastern? Well, that is going to be on yours truly, Covered Calls. Okay, so yeah, we don't take breaks. We don't need breaks. My dad would always say when I would take a break, he goes, you don't even need a break. You haven't done anything yet. That's just kind of my mentality that he kind of put into my mind. All right, a little fun there. Now, just real quick, remember that, and I knew he loved me. Okay, he didn't say that hurtfully, of course. Now, remember with what we discussed, the information we talked about here today, it's done for general informational purposes only. Options carry a high level of risk and not suitable for all investors. When we also talk about, now by the way, when we talk about swing trading today, it could be stock or option based. It doesn't have to be just stocks. Now, remember when we talked about our examples, we will do those in the Paper Money software application. And when we also talk about investing, remember that investing involves risk, including loss of principal. So we're taking risk for a potential return. So that's a part of it. And we want to kind of be made aware of that and just make sure we're clear on what that potential risk is and what might go wrong, especially if we talk about stops. Now, today, again, we're going to hop right into, let's say, the swing trading. And what I want to do just real quick is I want to pull up something just real quick. And I'm going to pull out, if you don't mind, just a quick sheet of paper. So remember, I mentioned last week. So if you said, hey, trend plan, okay, that was last Thursday. I sent that link out to you. If you have not done that yet, go back and watch that, study it out. I'm going to say something that might agitate some people. Tough. I have never met anyone that says, I don't believe having a plan is a good thing. No one's ever said that to me. But if you were to ask, how many of you could actually show, and by the way, this is the goal of doing this, how many of you could actually show a plan that's written down in 2 minutes or less? And I'm going to tell you, I've done this for over 25 years. I can count on less than 3 fingers people outside of the office that if you said, show me a written plan, highly likely you're not going to get anything back. No answer to the question whatsoever. I think if we're talking about having confidence and trading bullish markets, etc., having a plan, I think, is just critical to really where you've done the due diligence and you've gone through a process, okay, of trying to really understand how you're trying to repeat things in terms of trends and strategies. So I don't want you to be a part of the 97%. Now, you can if you want to, but I'd like you to kind of self-select yourself and say, look, if you ask me that, I can show you in 2 minutes or less my sample plans. That'd be beautiful. I think it could be helpful, okay? Now, let's kind of talk about, when we talk about this, is their focus really more on swing trading or trend trading? And notice what I said here is I'm showing is it's really trend first over swing, okay? And the reason why I actually say that is there tends to be swings in the trend. Now, don't worry, I'm going to explain what I really mean by that. Now, when we talk about also swing trading, this could actually be stock-based, okay, or option-based. So if you said, hey, I don't like to buy stocks, okay, well, no one said you had to, okay? You might do long calls, you might do short puts, verticals, whatever they are. It could be stock or option-based. Some of the things I talk about are going to reference the stock, but then we could translate that to, say, options. Now, the biggest actually thing is, why would someone do swing trading, let's say on stocks? Well, the biggest thing is, what I've learned over time is dollar cost averaging, okay? Now, let's kind of just show what I really mean by this trend trading first. Well, when I kind of say this, sometimes we actually see stocks where they're kind of in an upward trend, right? They're kind of in an upward trend. They kind of go up, they go down, they go up, they go down, they go up, they go down. And then lately, we kind of saw a lot of stocks go down in the shorter term, but the trend was still intact, but in the short term, things fell down. Well, if someone has any capital left, they might say, look, I'm going to try to take advantage of short-term volatility. The channels are still in place. The support is still in place, but I might want to try to buy on the dip in the price, okay? Could be Amazon, could be Apple, could be, example given, different ones. I might say, look, I'm going to try to take advantage of that and try to play a move back up to the prior high and or the extension target. So they're riding the trend, but in the shorter term, they're saying, hey, prices fall down in the short term, and they're dollar cost averaging. I think that's actually kind of one of the bigger things that maybe a lot of investors might not maybe think about, but the dollar cost averaging is kind of interesting. Now, the biggest actually thing is when we talk about the purpose of this. Now, forgive me, it's hard to talk and type at the same time sometimes. So I want to kind of talk about the purpose of it. The purpose of this is we're trying to trade the trying to trade a portion of the trend. And I'll talk about what that portion means to me. So we're looking for, let's say, stocks bouncing off support, okay, and going back up to resistance. Now, we don't know that for sure, but that's what we're trying to do. We're also, for example, trying to, let's say, something that is broke resistance or breaking resistance, okay, to the next potential resistance. Now, our purpose, this is what our purpose is, okay? When I say our purpose, our class purpose, we are trying to find stocks. The goal is to find setups that could go up 6, 8, 10%. Now, why did I just say that? Well, because remember, if we're going to take 6% risk, probably want to see that we could at least get that potentially back if it were to go to the upside. Okay. So a lot of times we're not looking for big 20% moves. We're just looking for something that actually covers the potential cost or the calculation of risk. Now, the other thing is when we talk about the time, so that's talking about the percentage. So when we actually also talk about, let's say, the duration of time, the time frame, okay, we're really talking about something 2 to 3 days, okay, to 2 to 3 weeks. That's really the time frame, okay? Now, when we talk about when we talk about, let's say, the application, can anyone explain to me if someone's going to do a bullish swing trade, what type of trend might the investor actually try to do those in? Now, by the way, this is going to be similar to what we said before. We actually said trend on the trend plan, trend 2, diagonal resistance breakout, trend 3, bull flag mania or bull flag zilla. And we're going to kind of asterisk trend 4. Okay? Because if you're in trend 4, you might want to pause and say, look, you're waiting, okay, for what? Now, so trend 4 really means you're up near what? Resistance. If you're going to actually do a swing trade in trend 4, you're probably waiting for the fill in the blank. You can buy a val E, buy a val A, buy a val O, buy a val U. We're waiting really for the breakout. So we're trying to really focus on things that is really trend 2, trend 3. And if you're in trend 4, orange color candles, you're just really waiting. You're really trying to trade the breakout itself. If we actually break out, you're not in trend 4 anymore. You're shifting back to trend 3, which is the really price above both moving averages, and you don't have an area of resistance. Now, the biggest actually thing is, remember, the number one thing is looking for stocks, okay, above 10-day EMA. And remember, I said this the other day, is that if you're above the 10-day EMA, and you go look at a 10-day whole moving average, there's a really good chance you're above a 10-day EMA, okay? Because remember, the EMA is a weighted moving average, and it's going to be close to the current stock price. So EMA is going to lag a little bit more, and so, but that's the minimum, okay? Now, could it be above the 30 SMA? Look, you prefer both, okay? But the goal is to at least get it above the 10 EMA. Now, the biggest actually thing is when we actually talk about the volume, 1 million shares average, okay? And the reason is that it could be stocks or potentially options, okay? Want to confirm that? And the other thing is, when we talk, I'm just going to speak to this, okay? We're looking for businesses that make money. This is not, we're going to buy a small cap company that doesn't make any money. Potentially in 2030, they think that we're not interested in that stuff. We're looking for companies that are making money now. The businesses are growing. These are like established businesses, okay? And there's a couple of things that I made mention on the other day in terms of this as well. So if we said stock volatility preference, okay? When we talk about vol preference, okay? If we're talking about something that is in an upward trend and has been, it might have a 15 to 24 IV. The IV is going to be affected by where the VIX level is, which tanked again down to the 14. How many times have you seen that? Okay. And also it might be affected by, is there upcoming earnings, which many of the earnings are coming up, let's say, in late January. But if they're trending, they might be 15 to 24. Those are like the smoother type trends potentially, or stocks that might not move as much, which isn't horrible, but as long as they're trending. We said the other day that if they're 15 to 24, 15 to 34 IV, they're just more volatile. Now, if they're a little bit more volatile, they might be stock setups. They might also be maybe options, something you might want to try to sell something on, right? Now, what I want to also do is I want to kind of back this up for just a second, kind of throw this in here. Let's now start talking about application. We're looking for sectors, strong sectors, okay? Strong sectors first, and then we're trying to find the stocks. So let me ask you just a quick question in terms of application. If I were going to ask you what sectors in the current market have been strong or are strong, let's go into application now. Now, here's the deal. If we went to this just real quick, and I went into Market Watch, I went to the sector list, said what sectors have actually been quite strong. Sectors, pull it up. Now, if we're talking about, let's look at a 1 week. The purpose of looking at 1 week is kind of to see what has momentum. It also could be something where we're saying, hey, this is maybe forming a pull. Because something that's gone up very strong in the short term, if you go look at it, okay, that's probably going to look like a pull. So if you said, I like bull flag pulls, well, you're probably looking at the week percent, okay? If we're talking about something that's had a higher high, higher low, you're probably looking at the 1 month percent, or in other words, 21 trading days. Well, if I just say, look, if we're talking about the strongest momentum, we'd have to say gold, okay? Now, here's the deal. Now remember, I said before, precious metals have been trading like consumer staples. Now, it kind of comes across as like blasphemy. I can't even believe you said that. Wash your mouth out with soap. But actually, if you think about this, it's kind of like money in a way, is that investors are saying instead of being in a US dollar that is being devalued and devalued and devalued and devalued, what is more staple than money? Okay? So investors have been plowing, okay, into that area. We're not going to get into that, but you know that. Now, the biggest actually thing, if we're talking about sector, okay, so when I say gold, I'm saying silver. When I'm saying gold, silver, I would also include copper, anything precious metal based. Obviously, some of those metals, which have been trading like consumer staples, okay, really have been, some of them are less volatile than others, noted, like platinum and palladium. Now, if we're talking about sector, we probably have to say consumer discretionary, which we mentioned on Friday, which is getting a little push to the upside. So the reason why I bring this up is we're saying to ourselves, where are we likely going to see the swing trades? Well, it goes back to top-down analysis, okay? So if I pull these up on the chart and say, what does this look like on the chart? IXY, if we're seeing the sector do a bounce or a breakout or staying above its moving average, then there's a probably really good chance that there's probably stocks in that area that are pushing to the upside, because the group doesn't go up by itself. It goes up by the holdings that are in the group, okay? And I think we pounded the table on that quite a bit. If we actually said, well, geez, do we actually think there's going to be some stocks in the base material space that might be going up, the second sector? And what about this third one? I mean, at the end of the day, people need liquidity, okay? And if we pull up, let's say, the third one, you're going to see, well, IXM. So it's probably not very difficult in a bullish upward trending market to see where those trades are going to come from. Now, remember, when you look at these on the chart, you're really seeing that's a higher low, okay? That is bouncing off the 10-period moving average. And remember, the direction of that moving average is important because we're looking for what type of trends? We're looking for upward type of trends that are on the daily chart and the weekly chart. Now, first off, let me actually also go back to this. Let's just kind of make mention of this here. When we're looking for candidates, can anybody remind me the 3 different ways to find trending stocks? Can anybody tell me what those are again? What was the 3 ways? And you don't need 33 different ways to do it, okay? Number 1, what did I say? Number 1, let me actually write this down right here, right on this plan. So if we said, I can't find stocks. Well, I'm going to say something very direct. If you just listen, so that's always helpful, listen. Number two is just practice what I'm saying and just follow the examples in the paper money account and also practice in the paper money platform. I think that'd be a big help. Stop doing it your way, at least at this moment, and practice what we're talking about in a class format. To practice. Did I say practice a couple times? I said practice, okay? So when we're talking about finding trends, where do we find those? We said the Trend Weekly. That was the number one way to find stocks that have trend, which really shouldn't be that surprising. Number two, what do we actually say? Let me type in Trend Daily. If we can find stocks on a Trend Weekly that are in Trend 2 and or 3, it's probably a pretty good chance that we're actually going to find stocks that are trending on a daily time frame. Now, the other one is we actually also said find the stocks that are actually showing the relative strength. Now, here's the deal. We don't need 52 different ways to find stocks. Here's the deal. If we looked at these three things, okay, the chances of you finding trending stocks is astronomical if the market is trending and or if stocks are trending in general. Everything else that is shown is a derivative of these three. We love derivatives, but the fact is we miss the point and the principle of seeing the weekly charts, dailies, and relative strength, okay? Very important. And what am I trying to do? I'm trying to help you just kind of get over that hurdle, okay? Just sell out in the paper money account, practice this, and tell me what you find for yourself. Now, the biggest actually thing is from these, we actually then get into that bounce, okay, which we labeled as, let me just type that in, call T for trade above the high-low day or call hold. The CHE was close higher gap, okay? Those are the bounces. Now remember, we talked about the funnel, right? And I'm going to do this fast because we hit this the other day. When we talk about breakouts, we said when we talk about breakouts, it could be the 20, 55-day high, okay? We also talked about the breakout script in general. The breakout script in general is going to say, like, is it breaking out today, bullish or bearish? Is it breaking out, let's say, 1 or 2 days ago? Is it a continuation? Is it a retest of the breakout area? Those are three places to actually find breakouts. Nice thing about those is it can help assist. Remember, scripts are not guaranteed for accuracy of timing, but it could be a help. Now, the biggest actually thing in the last one is when we talk about really, let's say, the moving average crossovers. Remember that 20-day hole, whoa, easy, 20-day hole, okay, counter, and the 20-day hole counter, and with that, we could just say the moving average crossover script. I mean, here's the deal. You got to remember something. And sometimes people don't like when I say this because they're like, no, there has to be more than two ways. But really, if you think about it, a moving average crossover, in effect, you could actually say is a breakout. It can also be a bounce if it broke out. So a moving average crossover is really a derivative of a bounce and or a breakout. And the last one is really a price pattern setup. Now, if we actually said, well, what do you mean by that? We would say cup and handle, okay? Cup and handle. We could also say ascending triangle. We could also say, in this case, maybe flags. Now, if it broke out of, let's say, a horizontal area of resistance, okay? So if we broke out of, let's say, a horizontal area of resistance, and we're going to come to examples right now. If we broke out of a horizontal area like example given, let me show one. So if I pulled up, let's say, RTX, and I said, hey, this kind of looks like it kind of had, in this case, something where you kind of had an area of resistance. It falls back down, runs back up, pulls back to the rising, upward trending moving average. Could that be cup and handle like? Is cup and handle different than a bounce? Is it different than a breakout? No, it's a price pattern. Breakouts, they're a derivative of a bounce or breakout. Where's the bounce? Well, the bounce is right there today. Is this also an example of a breakout as well? Yes. So cup and handle is really just a derivative of a bounce or a breakout. So what you want to get really, 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 really good at is bounces and breakouts. And everything actually funnels back into those two things. Now, are there some investors who try to buy into the red candles? Yeah, they're probably maybe more like value type investors. It's not that we don't look at that, but that's usually not, we're looking for it to break out, show confirmation that it's really starting to reverse. We're not buying in just to abyss of prices declining, unless we're showing an example of, let's say, something that is at a horizontal or diagonal support. But that's not really the kind of what we look at first. We're trying to see more confirmation. Now, if we also said, let's say, show me an example of ascending triangle. Well, if we look at an ascending triangle, this is kind of an ascending triangle on JP Morgan, okay? Now, if we take a look at JP Morgan, we kind of have a horizontal area resistance, maybe a little diagonal support right there. If we looked at this and said, is that an example of a bounce? Yeah, bounce off a diagonal line. Is it a bounce? Is it a breakout? Well, it's a breakout of the horizontal line. The answer is both, okay? So don't get so caught up in is it a bounce or a breakout, because it all goes back to a bounce or a breakout, okay? Now, if we look to say something like this, what does this look like to you? What does it look like to you? And we're talking about price patterns. Well, if we actually looked at this, we'd actually say it really kind of looks like, in this case, really, there's the pull. How can we see the pull so quickly? Well, the whole purpose of the candlesticks, if you see so many candlesticks in a row, you can't count them all. There's your pull that is hitting me right in the face. And if we actually see the non-green candles, non-green, there's your flag. Remember, this was built for James, okay? I'm just a simple cut guy, okay? How do I see the pull? When you see a whole bunch of green candles in a row, minimum 5 to 7, okay? How can I see the flag? Non-green candles, okay? If we get orange, shallower pullback. If we get orange and purple, a little deeper pullback, but might still be holding in there. If we don't see any red colored candles, the pullback is not that bad. And all of a sudden, if we start to see the green color candle, doink, to the upside. Now, I read the survey. Thank you for filling that out. Someone said to me, please do not say doink. I don't like when you do that. So I'm going to try to actually create another word, because I read the comment, bounce. Okay? And that bounce, how can we see the bounce? That green dot right there. All right? So, okay. So now I want to talk about, just real quick, we're going to look at these examples, okay? So when we talk about the moving average crossover, the price patterns, these are derivatives of the bounce or breakouts, okay? The miscellaneous is someone buying into complete sell-offs, buying on red candles. The person that asked me that question, I asked them, do you do that? They're like, no. Okay, but could someone do that? Yeah, sure, they could do whatever they want. We're talking about looking for things that are bouncing or breaking out, which means we're looking for confirmation, okay? And so that's why we don't talk about that, okay? Now, the biggest actually thing is when we're talking about, let's say, initial stops, okay? So when we talk about initial stops, okay, initial stops, we're looking for example given, and this should not be a surprise, okay? 2 to 3% below support, okay? Now I'm going to show you this in just a sec. That should not surprise you. Anything that's over 50 bucks, we use 2%. Anything below $50, we use 3%, okay? Now what I want to do is I want to kind of show you some examples, in this case, of adjusting stops, okay? When we talk about adjusting stops after entry, we actually look for really the red, well, let's just call it a higher low method, okay? So when I say a higher low method, I'm talking about a red-green candle, okay? Red-green candle. And let me show you what I mean by this. I'm going to write down the ticker of C. Now, you might bring this up and say, well, why does this matter? Well, because a lot of times when people get into a trade and it starts going up, they're like, well, geez, how do I actually manage my stop? Where do I potentially get out? How do I know when the trend is changing? We might want to know this. Okay, this is why I talk about it. So when we're looking for something, when I look at a stock C, and let me actually go back to that right I hope that pulls up, but if it doesn't, we'll bring it up. Let's let that reload, pull it up. Let me see if I get those charts. It doesn't. Let's go back to that there. Now, what I'm looking for in this case is I want to go back to just a standard chart, and I'm going to pull up that first one just real quick. Now, we're going to look at a stock symbol called C, okay? Now, if I look at C, what you're now going to notice is, and why do we want to know this? Well, let's say the investor traded, let's say, a moving average crossover, not an advanced concept. Might be advanced if the investor executed, but that's not necessarily advanced, okay? Now, if we take a look at this, it could also be like, hey, it's a diagonal breakout on that same day. See what I'm saying? When you get bullish signals, it's usually not just one signal. You get multiple, kind of showing the confirmation. Let's say the investor says, look, I got in right here. Well, what we're going to do is we're going to kind of circle these red and green candles side by side. Okay, now who made this? Me. Why? Because you get in a trend like a stock that has momentum, and then it was just going up so quickly, you really didn't have any idea of where to move the stops, okay? Now, well, where do you set the stop? Where could you? Well, what I've learned over time is really are taking the red and green candle side by side, drawing the line at the open of that green candle, and then actually moving up the stop, less 2 to 3% below that. Red, green candle side by side, say it out loud, draw a line from open of green candle, moving the stop up. So if we get a red and green candle side by side, that is, in the shorter term, a higher low. Yeah, but I don't want a deeper pullback. Well, a lot of times when these stocks are actually going to the upside, they don't get deep pullbacks because people are trying to get in on any pullback. Now, you're going to notice right here that it actually pulled back. And I did look at this already. It did. If you said I set my stop right there and the very next day it dropped. Well, here's the deal. It didn't drop by more than 2%. That would have almost stopped out. It didn't. And it pushed right back to the upside. So what the investor is doing is saying, okay, if my stop was underneath here, I'm now moving it to here. Less 2 to 3%. That is one way. Now, the other way we've actually talked about this historically is also looking at intraday lows. Now, you already know that. Remember when we talked about using the intraday lows? We talked about using this if we said, hey, if that white line or red line are actually going to the upside, the white line, again, is 8-day low. The red line right there is really the 10-day low. If those lines are actually going up, that's where the investor might also say, I'm going to move up my stop. I like that because it's a visual way, okay? So we're going to just call that the 8-day low, 10-day low script. Okay, and if those lines are actually going to the upside, that's a visual way to move up the stops. Now, the other way to move up the stop, which I'm not going to go into, but I'm going to say it, is the reward to risk stop. Okay, and that reward to risk stop we talked about the other day, which is 1-to-1 or 1 to 1.5. And when does the investor consider using that? When the stock is within probably about 3% of target or resistance, which could be also a target, okay? Now, so those, if we're talking about adjusting stops, what methodologies? Because that's kind of the thing. You get in, you feel pretty good about yourself, but then you kind of feel like, well, I don't know what to do now, okay? Well, higher low methodology. That could also be very close to where this is visually. And if you start getting within the target, which, by the way, I've never heard anyone talk about that. Who made that? I actually made that because you get so close to the target, you did everything right, and then you were so close, and then it took it all back. And that just was horrible. So it goes back to kind of why risk more than what you're trying to make. And you're trying to say, look, that upside potential might be getting narrow. Now, what I want to do is I want to kind of talk about some of these sample trades with kind of what we discussed here today, 4 examples. Now, I think kind of some of the best way to actually learn is to like practice. Well, let's go for it. Let's kind of take some of these things we actually just talked about and show the execution. Now, I'm going to go back to the stock trade and we're going to go look at the example given. Let's go look at I'd like to go back to just real quick a stock. Let's go look at Morgan Stanley for just a second, okay? Now, if we look at Morgan Stanley, we always talk about, let's say, now, if we said, what type of setup is this? Well, if we looked at this, this would be like a flag, okay? Now, when we talk about timing, when we talk about the timing itself, we count to 3. Well, number 1 would actually be the shorter term moving average goes green. Okay, so there's 1. Now, if the price, that's more of an aggressive entry. Okay, you haven't had that 20-period moving average go green. The keyword is yet. You hadn't had the moving average crossover yet. But if that price is getting above the 20-period moving average, what's the chances we could get that step number 2? Probably pretty high. Now, what we're going to do in this case of application of what we just talked about, we're going to say, hey, where do we see that maybe support? I'm going to go back to that little red-green candle methodology. And what we're going to do is we're going to set that stop right underneath that low, less 2 to 3%. And I'm going to draw it up right here. So if I took, let's say, that 173.39, okay? And remember, why that point? Why? Well, because if you go below that point, you're not making an equal low, you're not making a higher low, you're making a lower low. So we're saying if you go lower than that, the paper money account wants to get out. So we're going to say, look, if we go to 169.92, exit the position. Now, if it's a stop, it's a trigger to sell at that price, and the key word is or less. Now, what was the percentage target that we were looking for again? Can you remind me? I'm struggling. As I'm getting a little older, I kind of be a little bit more forgiving. What was the percentage target? Well, if I actually also went back and I want to kind of, I want to go back to the trade. I'm going to bring up, in this case, that MS. I'm going to go to the trade tab just real quick, right click on the ask price, go to buy custom. I'm going to go with the OCO bracket. Now, remember, if we're doing a swing trade, what are we doing? Putting a target on it. So we're going to be really using buy custom with OCO bracket. Click. Now, if we did this right here in the IRA account, like we said before, which is if we're going to do a stock trade, we had an 80-20 methodology. 80% of the stock portfolio, 80% of the portfolio was stock-based. That means that some could be swings or trend, okay, and the other 20% of the balance was going to really be option-based trading. Now, we said we're not going to really invest more than 8% in an investment. Now, we're willing to do 5 to 8%, whether it's a trend and or a swing. Now, that may be controversial. But our examples, if it's trend or swing, we're going to treat them as the same percentages, between 5 to 8% of the stock portfolio. So if we said, hey, you know what? I'm going to try to get in about $9,000 worth of stock, okay? We're going to actually set a stop at, what was the price again? $169.92, okay? Now, we already said before, does a stop guarantee anything? Nope, it doesn't. $169.92. So we're saying, look, if we get in, and it goes down to that price or less, it triggers a sell, but the con is we don't know exactly where it's going to fill at. Now, number 2, if we're going to be good at swing trading, we got to have an idea of what's the initial stop, which I don't think is that bad. But then the second thing we need to be good at is what is the methodology for raising up stops. We talked about the higher low method, the red and green candle method. We talked about the visual method, which is where we can see the 8 or 10-day lows over time, visually raising up the stops. We also talked about the way in which we could actually look at the reward to risk methodology once we get within about 3% of the target. Those are critical. By the way, what is the target? Calling all technicians. Cameron actually teaches the advanced charting technique class actually on Friday. So I am counting on that Cameron has taught you sufficiently well. Now you know he has. I just want to kind of make sure that you feel comfortable. What is that target? Now, if we went back and actually looked at this and said, where do we actually see that target? Now, I'm going to go back on this chart. And first off, if we kind of looked at a flag, the biggest one. Now, by the way, when you look at a poll, sometimes you think, well, hey, there was a red candle in the poll. That's not a big deal. That's not completely unusual. If we actually looked at this and we said, James, I'm kind of more of a skeptic. Now, don't worry. I can look through a keyhole with both eyes as well. So just join me for just a moment. And if we take a look at this, if we said, where might it try to go up to? We don't know if it's going to, but we're going to see what might try to happen. Now, if it did go up to that area, the keyword, if it did, what's the percentage? Now, by the way, I'm going to go from where we are now. Why? Because it's where we're trying to get in. It's not where it was on the breakout. It's where is it now and what might be that potential move to the upside. Well, again, if we're measuring a cup and handle, if we're measuring, let's say, a bull flag or anything like price pattern base or ascending triangle, we're looking to see if we get in now, and if it does go up to that first target, is there that 6, 8, 10%? Now wait, stop for just a second. Is this like just a short-term move in a recent trend, or has there been an upward trend? And the answer to that question is, it looks like there's been a trend over time. Okay, so this is just trying to ride a portion of the trend, and that sure sounds like swing trading. Now, let's say you said to me, James, I'm not going to put it 195.48 because I know that's where other investors are going to try to sell. I'm going to try to get out at 193. I'm going to try to get out ahead of other investors who try to sell, and I want to get out ahead of them. Okay. Now, if you take a look at this, got a 193 price target, 169.92. So they got a target and a stop, and we talked about how that stop works. Now what I'm going to do is, if I go to, let's say, confirm and send, now what we're going to go ahead and do is going to put that right there, and we can see that. We're going to put it in the IRA. Now, how do you really learn? You practice in the paid money account. You need to be practicing 3 to 5 trades a week to really get any type of proficiency at all. One time a week, look, no one's probably going to live to 150 years old. We need faster practice, okay? So we need 3 to 5 trades a week to really get some practice of what we're learning. Feel free in the paper money account to practice so we can practice the stop methodology, reviewing the stops and so on. Let's practice together in the paper money. We're going to go send the order. Now, I'll fix that, but what you're now going to see is we're going to buy the 9,000, and it's about 50 shares of stock, and I will fix that. Now, what I want to do in the remaining 2 minutes, I want to kind of show some other stocks that I want you to practice on in the paper money account. Well, one of the stocks we made mention before was a stock called RTH. Is that an example of a horizontal breakout? It kind of looks like it. Is an example of a bounce? It kind of looks like it. Is an example of a moving average crossover? Yeah. So the biggest actually thing is when you see something that's bullish, it might have multiple different things showing you or confirming a setup. So when we say a setup is just saying, hey, it's showing maybe the technicals that the bullish investor wants to see. It's not guaranteeing that it's going to go up. It's just saying, hey, at this moment in time, bulls are trying to push the price higher. The other one we made mention of was actually JPM. The other one we'll actually make mention of is also kind of showing those little higher low type of setup is WFC. The other one that we'll actually kind of make mention of is RCL. Now, the significance of RCL, we said the cruise lines, okay? CCL, don't, okay, bounce. I'm trying, I'm working on it. And you're going to see NCLH, bounce. See, I'm getting better, okay? You're working with me. And so now the one here is lagging a little bit is really Royal Caribbean, okay? Now, if we looked at Royal Caribbean, this last question, could this be an example of a horizontal breakout where we gap down from? Is it maybe trying to reverse? And by the way, we've done this quite a few times where this is kind of showing an example of a reversal, and this might try to play like a catch-up trade. Your homework assignment is I want you to review the material that we actually discussed in the sample plan, and I want you to go out and try to practice the bounces and or breakouts We included crossovers and price patterns, which are derivatives of bounces or breakouts. I want you to practice, okay, what we actually talked about in the paid money account, minimum, okay, minimum 2 to 3 trades a week, minimum, okay, better 3 to 5, okay. Now, this has been recorded, so you can also go back and watch the recording as well. Tomorrow, I'll do futures in the morning. Second, then I'll also do the cover call class, which also dovetails back into really trend trading, finding a trend. So these 3 first classes are really going to try to really set up bigger picture trends and also seeing the shorter term type of trends as well. Now, remember with what we discussed here today, it was done for example, illustrative purposes only. Thank you, Cameron, for answering those questions in chat. Stay tuned for our next webcast coming up right at the top of the hour. Okay, yours truly. And also remember that with what we discussed, it was done for example, illustrative purposes only. Thanks to Cameron, and also stay tuned for his class coming up next. Take care. Bye-bye.